Corner, we're going to be talking about spices, the future trading of that, and how that could actually help the entire value chain. To talk about that, we're joined by Mitesh Patel, Director at Agro Industries. And Mitesh, firstly, thank you so much for joining in with us this afternoon.
Thank you.
I want to just start by talking about the importance that one could have in terms of the trading of the spices. How can one actually benefit this? What is it that one should do to benefit from leveraging this, and how could they be doing this?
As per, as you are doing a trading in the spices industries, there are too many fluctuations and there are many risks, demand and supply also, the crop size, many things are to be considering at the time of trading. NCDX, I think that the NCDX is the right way to liberalize your risk, and you can manage your risk by trade in the NCDX. Suppose your buyer asking for a future trade and your sell is open for a future, you can make a buy position in the NCDX and you can secure your position. Same in a dollar, you can also book the forward contracts and you can minimize your risk.
Talking about risks also, minimizing risks. There could be risk in terms of procurement risk, inventory risk, credit risk that shape out. Could you just specify in terms of if someone has to endure and how do they face this risk, individual risk, all individual risks as a trader, as a farmer? How could one be actually using the exchange to minimize their risk for this? What is it that you could give us an example that they could do to protect themselves from the risk?
Yes, ma'am. Regarding this as procurement, just as I told you that, suppose you have a forward sales, like in an export, there are always a forward business, like in a June shipment, July shipment, August shipment. You can minimize your risk by taking a position in the NCDX, and you can minimize. Same thing, you can book your dollar with your banks or with the National Stock Exchange, and you minimize your risk. Regarding the farmers, India should have to develop many things regarding the warehouses, and there should be developed in a platform where the farmers daily trade and daily spot market should be developed in India. It should benefit to farmers also.
Okay. Also, just in terms of a scenario, if I'm talking about when you have to give me in terms of a significance of this price risk management, how can you use the spices industry? If someone is holding already some of the futures at an expensive price, and if then the price starts going upwards or downwards, how is it that one should actually protect themselves from this as a exporter, as a buyer, as a farmer? What is it that one should do in terms of a case study, if you could give an understanding?
Yes, ma'am. If suppose you only do a trading like buy or sell, then it should be a risk for your business. That's what you should have to make a stock in a spot market against your position in NCDX. Then you can minimize your risk. Suppose you bought some cargo in NCDX. So you should be calculate your margins and everything, and you can sell this cargo in the spot market. Then you can minimize your risk.
Okay. That's about leveraging the spot market along with the futures market as well.
Yes.
But, Mr. Patel, there are a lot of things other than that also which could impact us. Is it obviously in terms of when you're talking about the spices industries, when we talk of turmeric, coriander, all this does get impacted in terms of, the rains that we have, the unseasonal weather. That is a factor that could impact also in terms of the crops as well. Then what should one be doing? Because if there is a reduction in the crop production, if there's an issue in terms of that, that means the prices would go up. How can one leverage their opportunity over here, or how could one benefit from the futures in using this then?
Yes, ma'am. The natural calamities we cannot control, and natural accidents like raining at the time of harvesting of crop, we cannot control these accidents. And at that time, suppose you should not have to open your cells. And if suppose you have sold some cargo in a future market, in a spot market or in a for export market, you should have to cover this your cells from the NCDX. NCDX is giving you next 3 months contracts, so you can minimize your risk by covering your cells from the NCDX.
And Mr. Patel, I also want to understand in terms of how spices merchants and processors actually could take advantage of the derivatives in terms of the long position, short position. How does that shape up? If you could give us an example of what they should be doing when?
Yes, there are many platforms right now in India. NCDX is the one of the best platform, and whenever you have any sales or buy position, you can hedge your whatever the stocks, and you can minimize your risk. Uh, these future markets are very supportive to the exporter or trader to minimize their risk.
Right, very supportive, obviously, in terms of minimizing the risk, and that is what it does. And just I want to understand one last thing is importance of this derivative market. Help our viewers understand why is it important for the entire value chain, and why is derivative market would be beneficial for any of them.
Yes, this market is very much benefit to minimize the risk, as well as you can cover your market. You can take deliveries from the NCDX and your cargo. Suppose you sell some forward contracts in the cumin seed, you can take a delivery from the market. You can procure your goods from the NCDX also. So the future contracts, future markets. Too much supportive to you to minimize your risk, and they are also support you to procure your material from the these future markets.